Ms. Legalista here. Welcome. Thank you for joining. I want to talk about insurance policies. This woman thought that her father thought that he was purchasing insurance that would cover his funeral expenses, so that his children would not have to worry at that point in time. Well, that wasn't the case. Let's take a look at this because in the end, all they got was hundreds of dollars for a policy that originally stated it was going to be $35,000. So the key here is to actually know what it is you're getting at different points in time, depending upon when you may pass. Understand what it's going to look like if you pass at 30, if you pass at 50, or if you pass at 80, because for this type of policy, it is going to be different. But let me go ahead and go to this so that you can see exactly what happened in this case.
Life insurance is meant to give people peace of mind that expenses will be taken care of after they pass.
But not all life insurance policies are created equal. One NBC 10 Response viewer reached out to us when she says she couldn't believe what was written in her father's policy.
My father was a very humble person.
Madeline Rodriguez remembers her father, Armando.
He was a sweetheart. He had a heart of gold.
With great affection.
He was just a great soul.
And she remembers him telling his 4 adult children they didn't need to worry about his funeral costs.
My father, for many years, told us he had a life insurance policy. It was $35,000.
Armando passed in June. In their grief, they discovered something they say they could hardly believe about his life insurance policy. Armando had a decreasing death benefit insurance plan. Armando had purchased the insurance in 1987 for himself and his wife, $9.50 a month, paid through his Sears credit card account. When his wife, Sonia, passed, the insurance paid out $2,600. That was in 1995. Since then, he'd paid on a new policy at $7.50 a month.
My father died believing that he had life insurance that was going to cover his funeral services, and we wouldn't have to be burdened with any of this cost.
At the time of his death, his family believes he'd paid at least $2,200. They couldn't find his policy, but when the insurance company sent it, take a look at the chart of age at death and the amount of benefits. It showed decreasing benefits, and after the age of 70, a flat payout of $800. Armando was 82 when he died.
So the whole time your father was saying, kids, don't worry. This life insurance policy is going to take care of my funeral expenses. How much were the funeral expenses?
It was over $9,000.
And how much did the life insurance policy pay out?
To the funeral home, it only paid out $200, and for us, it was $600. So $800 altogether.
Because the amount of the death benefit decreased as he got older, the benefit is all for the insurance company.
Tony Stewart is a life insurance expert. He says there are 2 keys to buying policies. 1, know what your goals are.
Those are the basic needs is, take care of your domestic partner, to leave money for your kids, to establish an inheritance, to pay for final costs, maybe to take care of a business partner.
And 2, know exactly how the policy works.
There are some very complex insurance products out there. And so if you don't understand how the products are going to work, the money may not be there for you or your family.
All right, let me sort of stop there now that we have the gist of what is going on here. How many of you right now want to go back and pull out your policy because you want to know exactly what kind of policy you have? Is it one of these decreasing coverage types of policies? Whereas when you get older, the thought process, let me talk about this for a second. The thought process is when you get older, you have less obligations. When you're younger, you have maybe a family, you have maybe a mortgage, car payments, debt, things that you don't want to burden your spouse or your partner with. And so it's set up to provide a large amount of coverage when you're younger, with the thinking that once you get older, you won't have all of those things. You'll have some retirement, some savings, and therefore your life insurance is really not what you're going to be depending on for your family. That's the thinking. At least that's what I have been told in the past. A lot of times people forget, though, when they get older nowadays, guess what? a lot of people still have mortgages and a lot of people still have some debt, because it's not like you all of a sudden stopped going anywhere just because you retired. So you still have a vehicle, you still take trips. So yeah, there still may be some expenses out there. And then of course, there's the whole burial and funeral expenses that go along with passing. Is there enough there? I think one of the other things that people constantly try to figure out and try to balance, to what extent do I want to have enough insurance versus, because you saw how much she was paying there, not a whole lot a month, versus me actually investing that money and knowing that it's going to be increasing over time. So that's the trick, is sort of figuring out when you're young, hey, let me get this insurance policy that pays out a lot, so that by the time I'm older, I have invested enough to build up a nest egg, so that this little bit over here in the insurance won't really matter, because I built this nest egg up over here. The problem is sometimes those plans don't go like we think they're going to go. And yeah, we see what happened in this case. They really were expecting the insurance piece to pick up all of those expenses. So that's sort of the key there. Like they said in the article, it's all about knowing what your goals are, having your plans and putting those in place. But this is a key warning here for you to go back and say, well, let me pull out my policy, see what my policy says right now, see if what it would pay out right now fits my lifestyle right now, the lifestyle that I have for my family, because it may not. You may need to go back and make some adjustments. So not necessarily, I don't want to say a scam, but the gentleman said it right. The insurance policy is set up to benefit the insurance company. I think sometimes people forget that these financial products, yes, they're designed to help you, but you have to figure out how it works with your life. And just because it's insurance doesn't mean that it's insurance that you need to have. All right, so don't forget to give the video a thumbs up and don't forget to subscribe. Peace.